Inflation has come down from 34% to 6% in October. So there's reasons to be optimistic looking forward. So the National Bank has a lot on its plate. It's done a very good job for the last 25, 30 years. It's developed effectively. It's a strong institution. How do you measure that? Well, but the shocks of the last 3, 4, and even if we go back to that banking crisis of the last 10 years, have been significant for Moldova. But Moldova's come through, and it's come through effectively. In the fourth quarter, certainly, and then going forward, I think we'll start to see a recovery. Hopefully there won't be some new shocks around, in particular, the security situation in Ukraine next door. But there's good news as well. So there was the recommendation from the European Commission to open negotiations with Moldova on its candidacy to the EU. And Moldova is a relatively small country, so progress can be made quickly. Things have changed remarkably. I am Moldova in my heart, you know.
I would like to ask you to make a general picture. There are challenging times. The region is facing multiple crises, as does the whole world. How do you assess the chances of recovery?
Well, I think the chances of recovery are starting to become stronger. I think we've passed the worst part of these multiple crises. Hopefully there won't be some new shocks, but if on kind of the baseline or what we expect now, I think we see growth in Moldova starting to emerge perhaps in the third quarter of this year, in the fourth quarter certainly, and then going forward, I think we'll start to see a recovery. It's complicated. Recovery in Europe is slow right now, and particularly in Germany. Germany has been a country quite exposed to some of the external changes, external developments in China, with energy costs, and after all, Germany is the driver of the European economy. So when the German economy starts to recover, the European economy will recover strongly, and the Moldovan economy in turn will recover strongly as well. There is uncertainty. There are risks around, in particular, the security situation in Ukraine next door. But there's good news as well. So there was the recommendation from the European Commission to open negotiations with Moldova on its candidacy to the EU. Inflation has come down from 34% a peak down to around 6% in October. So there's reasons to be optimistic looking forward.
Let's continue to talk about Moldova. You were the IMF resident representative in Moldova during 1996-1999.
Yes.
How do the past and current challenges in the economy differ?
Well, that was really a different time. It was shortly after the collapse of the Soviet Union. 15 new countries emerged. It was a difficult transition. People know better than I do. The first few years of the 90s were really quite a difficult, volatile growth, for example, or I should say GDP in Moldova declined by 50% from 1991 to 1994. Inflation was over 2,000%. These are mind-boggling figures. For an economy to shrink by half, and for inflation to be 2,000%, this shows the kind of dislocation, the kind of difficulties that were taking place at that time. By the time I came in 1996, things had I think calmed down. Things were starting to find their own way. By 1997, there was growth. The National Bank had stabilized the leu. It was introduced exactly 30 years ago. By 1996, the leu had settled at almost exactly 4.65 per dollar, and it stayed that way for some time. Growth in 1997 was positive for the first time in nearly a decade, and things started to look good. Unfortunately, in 1998, there was a default by Russia and on its domestic and foreign debt, and that created a new set of shocks. So in 1999, the Moldovan economy shrunk again by 8.5%, And by the time I concluded my assignment here, I really had a sense of concern that the economy was volatile. Moldova was a small country. Its economic prospects, to me, looked somewhat questionable. Those were times of wage arrears, pension arrears. These were really difficult times. We've moved way beyond that. So Moldova still faces a number of challenges. It's had shocks. It's had internal shocks. In 2014 was a banking crisis that's had a long subsequent tail, let's say, or a long subsequent history. It's had recent shocks from COVID, recent shocks from the war in Ukraine, but the institutions are stronger. The basis is stronger. When I was here, the National Bank of Moldova had only started to accumulate some foreign exchange reserves to be able to provide a buffer for the Moldovan economy. Now it has over $5 billion worth of reserves. So things have changed remarkably. There are challenges. There are challenges for the budget. There are challenges to provide enough resources in key areas, infrastructure, health, education. There are challenges still in the financial sector, deepening it, developing it, making it inclusive for all Moldovans. There continue to be challenges in the business environment, but these are of a different magnitude, a different order than they were in the 1990s. Even at that time, the political system was also volatile. The constitution was changed several times in the 1990s, trying to find the way forward. Many of those questions have been settled and settled for good. So now we can really think about what remains and what still needs to be done, but in a much different context.
If I asked you to evaluate the current relationship between Moldova and the IMF, what would you say?
Well, I think relations are excellent, and I think probably they're as strong as they've been in 30 years. We have a big program with Moldova, a big financial support program. We've had those in the past. We've had a series of programs since probably 1992 or 1993. This one is large, and it covers a very long period of time, ultimately nearly 4 years from December 2021 until October 2025. That's a long period. And we're about to propose next week the conclusion to the board of the IMF of the fourth review of the program. That's a good sign. It means that our agreement is being met. We see good ownership. We see good performance. This program was made larger, augmented, as we say, after Russia's invasion of Ukraine, when the needs were larger. And now we're adding a second facility. It's a new facility that the IMF has to support climate change policies, to support energy security, to support green finance. So Moldova requested a new program with that facility. It will be $170 million. It's only the second one in Europe, so it's a big deal and a big development. We have good relations with our counterpart authorities. We're grateful for their efforts, and we strongly support the policy framework and where it's going.
Could you make a comparison between IMF-supported programs over the years in Moldova?
Yes, we've had a series of programs, as I mentioned. The fundamental basis of the program is to provide financial support. So sometimes they were, the needs were acute. Other times the programs were longer. We have sort of two main facilities. One is called a standby arrangement. And the second one are so-called extended arrangements. Standby arrangements tend to be 12, 18 months long and really deal with acute financing needs. The extended arrangements, the repayment periods are somewhat longer, and that allows focus on more structural or more long-lasting challenges. So with that in mind, the programs of the IMF typically focus on similar areas or issues as they go along, making sure fiscal policy is sustainable, making sure that the budget deficit is not too large, that spending is efficient, that tax revenues are raised in a way that doesn't hurt the economy. It doesn't put too much of a burden on households, on firms. We aim to make sure that the National Bank has sufficient foreign exchange resources and that monetary policy is effective, so it doesn't lead to inflation being too high or too low. We aim to make sure that the financial sector is working effectively, is well managed, is well regulated, is well supervised, and to make sure that the business environment and the labor market, that these also work effectively. So most of the programs have focused on those sets of issues. You may say, well, are you ever going to solve those problems? I think we make progress and we work along the way. There have been a series of shocks that have affected Moldova. So from time to time, it may seem that the programs are focusing on the same things, but they do change over time. The program from 2016 to 2020 really focused on the financial sector, which needed to be addressed after the banking crisis in 2014. It focused on cleaning up governance of banks, strengthening supervision and regulation of banks, and we think it has been quite successful. The banking sector in Moldova is quite different now in 2023 than it was 10 years ago. How do you measure that? Well, it's been through a really significant shock in the last 2 or 3 years. Inflation, higher interest rates, differences in demand for credit, and it's come through that quite resilient. So the number of banks is now at 11 rather than 28 before, let's say 15, 20 years ago. So we can see that the programs are helping. The current program has been focused on helping the authorities address spillovers from the war in Ukraine, higher energy prices, and the need to find ways to target support to households and firms that need support from high energy prices. Earlier, there were elements that were still focused on the pandemic and getting past the pandemic period. Now there's a need to come back to the question of growth. Your first question, how to support a recovery of the Moldovan economy and strong growth going forward, and now looking at these questions around climate adaptation, climate mitigation, infrastructure investments that are needed, and the key area of energy security. So Moldova, as you know, has relied on energy supplies from the east, and since the war in Ukraine, this has made that source of supply more vulnerable, more risky. So an opportunity to turn to other sources of supply from the European market, and here the authorities' efforts have been really quite impressive and quite successful to orient gas and electricity supply in a different direction, to protect the Moldovan economy from risk and from vulnerabilities around energy supply.
Talking about IMF support, how does IMF support fit into the general context of donor support?
Well, that's an excellent question. I think the IMF programs typically are seen as helping to ensure that a country has a sound macroeconomic policy framework in place. So a good monetary policy, again, so that inflation remains relatively low and stable, that the exchange rate is predictable. It may not be fixed, but it at least firms and the markets know that what the policy is around the exchange rate. It could move. That the budget is at a certain level, so it's not causing pressure, while also expenditures are increasingly efficient, increasingly well targeted, etc. And there's a component of structural and reforms for the business environment, for the labor market, for climate increasingly, that other donors can say, we're confident that this country has a good economic policy framework in place, and then we'll come in and provide additional support. Different donors have different objectives. They have different things they wish to focus on. Some now are focusing on social sectors, health and education. Others may be focusing on climate or on energy. Some may be focusing on roads. Some may be wanting to find ways to support the private sector, small and medium enterprises. If they can be confident that the authorities are managing the economy well, it gives them confidence to provide support. By the same token, the IMF provides financing. It's not just a program, but we provide financial support. But typically, we don't provide the total amount, the total envelope. We share that with other donors or other international financial institutions. So there's some risk mitigation, some risk management there. But it's really that it should be a program and a framework that has the support of the authorities, but also has the support of Moldova's international partners.
Now, what are the current key objectives for Moldova in the IMF's view?
Well, it would be around finding a good balance between continuing to respond to the shocks from effectively from the war in Ukraine, high energy prices, high inflation, how to respond to that, how to support households and firms, but in a way that's allows inflation to come down over time, so in a way that's contained, while at the same time starting to support growth. So the objectives there would be keep the budget deficit at a reasonable level, keep inflation on a downward path, while also finding ways to support growth. There's some specific areas, the financial sector, continuing to strengthen that. Recently, some aspects of the financial sector and regulation and oversight of the sector were moved from to the national bank, the insurance sector, non-banks. There's a need to ensure that those sectors develop well. They're somewhat underdeveloped in Moldova, the insurance sector and other parts of the financial sector. That's an important goal. A big goal is around the whole set of reforms and objectives around rule of law, around governance, around control of corruption. This is an important objective of the government now, led by President Sandu and Prime Minister Regiunea, to really put in place a system that controls for corruption, demonstrates a strong commitment to rule of law. Why? In the past, Moldova has been seen is perceived by Moldovans, by Moldovan companies, by foreign investors as a country that has difficulties with corruption and rule of law. So, as an international institution, we see a link from perceptions of corruption to low growth, to lower living standards, to low investment, to out-migration, to brain drain. So if you can address governance issues, corruption issues, rule of law issues, that should allow Moldova to have more investment, more investment by Moldovans, but also more investment from foreign sources, a higher growth, higher living standards, and a brighter future. So this program is focused heavily on those sets of issues. And lastly, this question of now climate change and energy security.
About NBM and collaboration. Yes. NBM. What are currently the key tasks for the NBM and the banking and financial system?
Well, it's a good question. The National Bank, if we go back a year and a half ago, was looking at inflation of 35%. It's now it raised its policy rate quite significantly and early. So it successfully brought inflation now back to its target range. That fight, so to say, that battle is never really over. So inflation could go below the target range. It could. The Moldovan economy now, as we've discussed, has been in a recession the last year and a half. So it could be that inflation goes too low. So the National Bank needs to keep a close eye on that and continue to manage the interest rate, the reserve requirements, exchange rate policy in a way that keeps inflation in its target range. It also is the main supervisor and regulator of the financial sector, so it needs to continue to keep a close eye on banks. As I mentioned before, a lot of progress has been made in the last 8 years on the banking sector after the crisis. Now there's a sense that maybe banks are over-regulated, that there's a concern that there's too much regulation and too many controls. We don't share that view. We see that there's a need to maintain a firm and robust regulatory framework around the banks, particularly given the risks that are facing Moldova in terms of growth, in terms of inflation. But they'll have to balance a little bit that as well. So if you keep regulations and keep management of banks too tight, then they don't provide credit. Then the economy it doesn't grow as fast as it could. So that will be also a challenge to look at the banking sector and to see how it's developing, see what possibilities there are. As well, and then this question of taking on new responsibilities from the capital markets authority, and looking at the insurance sector, how to ensure its strong financial position while developing more, looking at non-banks, credit unions, credit institutions. And expanding the financial sector. So the National Bank has a lot on its plate. It's done a very good job for the last 25, 30 years. It's developed effectively. It's a strong institution, but its job is never finished. So at each moment, there's something new to focus on.
I want to ask you a conclusion. How do you think IMF assistance to the NBM and other institutions has moved things forward over the years?
Well, that's a very good question. The national banks got off to a very strong start. It had very good leadership at the beginning, and it became an institution that was open, that it was data-driven. It was an institution that was willing to provide data. It had very good staff, so it recruited staff on the basis of their qualifications. And it became an institution that was willing to ask questions, to learn, to learn from, to follow best international practices. So the National Bank got off to a strong start, and it's continued to be a strong institution. In 30 years, we've had an enormous amount of technical cooperation, of policy cooperation with the National Bank, and it's really a capable institution. You may say, how do you measure that? And I would point again to the work that it's done in the last couple of years in responding to this inflation shock decisively and successfully, and earlier over the last 5 or 7 years and following up to the banking crisis and strengthening the functioning of the banking sector. It's a sound and strong institution, and that's why it can take on additional financial areas like insurance or like non-bank institutions. We continue to provide the National Bank technical support, policy advice. In some ways it's fine-tuning, but in some ways it's helping them to take on these new responsibilities and tasks. There are a number of other questions like how to regulate digital currencies, how to regulate payment systems, new and emerging electronic payment systems. So there's always some innovation, some development. Cryptocurrencies or crypto assets are another area. There's the whole issue of financial integrity, money laundering, and how to ensure that Moldova has a strong framework in place. Questions around cybersecurity, hacking, for the national bank itself, for the financial sector. So there are a number of challenges. It's a strong institution, but the important thing, it's a learning institution. It's an institution that focuses on best practices. It focuses on recruiting and developing excellent staff. It's an institution that's open to technical assistance and technical advice, and I'm confident it will stay that way.
Next questions is about the resiliences and the sustainability facility,
Yes.
RSF. Why is the RSF program important?
Well, I'm glad you asked the question. So this is a new facility that the IMF has. Our managing director, Kristalina Gorgieva, she came in and felt that the IMF needed to be more present in responding to the climate challenge, and the board of the IMF and staff agreed. So we put together the RSF facility. The aim is that the IMF helps bring climate challenges and energy sector challenges into the macro framework as strongly as possible. So we can see that in the countries that have had RSF programs so far, and in Europe it would be Kosovo and now Moldova, it's useful that it gives the Ministry of Finance a strong seat at the table in helping ensure that climate policies are well anchored in the overall macroeconomic framework. So they're not forgotten about, but they're not too large either. So that they fit into the budget framework, they fit into the monetary and financial sector framework, and that real progress can be made. From our side, the facility offers 20-year financing, which is very long-term for the IMF. Typically, our financing is in the range of 3 to 7 or 8 years. So now we're offering financing for 20 years. It's has a long grace period at the beginning, more than 10 years. So it's really attractive financing for countries to use this financing. And the idea is it helps countries strengthen their policy frameworks around climate issues and around energy security. So in Moldova, it will help put in place, for example, a new climate action law that will help set the basis for Moldova to respond to challenges like the carbon border adjustment mechanism that will come in place in the European Union and affect Moldovan exports to the EU, towards the need to have in place a emissions trading system in Moldova to upgrade and link Moldova's electricity and energy system more to the European markets for those. It will help in green finance and setting the basis for banks to increasingly provide financing that's climate positive or climate supportive. So it helps address a number of issues. What it doesn't do is provide project financing. So you know, there may be a case to say, well, look, if we hooked up the Moldovan electricity network to the Romanian network with a high tension power line, this IMF money's cheap, you know, it's 10-year grace period. That would be a great use of it. That's not what it's for. There are other sources or other institutions like the EBRD, the World Bank, KfW, that provide money for energy projects or climate-related projects. Ours is focused on getting the policies right and getting them situated in the budgetary framework for the country.
And what is the role of a central bank in adapting to climate change and mitigated associated risks?
Well, that's a great question. And I think that it's a question that's received a lot of attention in the last, let's say, 3, 4, 5 years. And some have asked what's the role of the central bank in doing this. And I think the idea is that you know, the financial system and its assets face a lot of risks. from climate change. So a key thing is to ensure that the financial sector appreciates those risks and that it prepares for materialization of those risks. So if a bank is lending to let's say some farmers who are exposed to drought or exposed to other climate challenges, they need to account for those risks well. Otherwise, they'll affect the public finances of the country, and increasingly to make decisions that are supportive of the authorities' overall efforts to reduce greenhouse gas emissions over the next 20 or 30 years. So it's important that policies are oriented around that, not only in terms of, let's say, what the Moldovan government is doing in terms of investing in roads or investing in irrigation systems or water networks, but also what the financial sector is doing in its own operations. So that's a strong, probably the strongest motivation for a central bank as a regulator and of the financial system to make sure that it's climate robust. Let's say that the financial system is taking into account climate change in its decision making and its provisioning.
I want to remember an interview given in 1999.
Yes.
In that interview, you talked about the lack of national consensus in Moldova. How do you see things now? Would you have any reasons to congratulate Moldova in this point of view?
Yes. Yeah. Well, at that time, I think the country was under some stress in 1999. I mentioned the Russian financial crisis, which had a strong impact on Moldova. There were this constant question of whether we should be leaning east or leaning west, and really kind of how to do that. And it was a time that I at the end of my term in 1999, I felt this lack of consensus was affecting policy making, affecting the clarity of objectives. I think moving ahead now, almost 25 years, the situation has changed. I think considerably. It's been a question over the last 2 decades or so. Still, where things are going. I think now in the history of Moldova, it's probably the clearest it's ever been. So the war and invasion of Ukraine, I think it's a big historical event, and I think it seems to me that there's a consensus now that Moldova's place is in Europe, and Moldova's path forward is through integration with Europe. That may take some time. It will take a lot of work, but this is really a historical moment, a historical opportunity for Moldova to join the single market, to join a group of about 30 democracies that have placed high principles on how their citizens live, how their societies work. It's really a historic opportunity for Moldova, and it's as an outsider who has some history in Moldova, it's a great opportunity. It's a big opportunity, and it's good to see that there is consensus and there's a vision that we need to move that direction, and we need to move quickly.
Are you impressed? There are some things that impressed you most about the way things have developed here recently.
I think so. I think the response to the shocks that have hit Moldova in the last 3 or 4 years are significant. At the beginning of our discussion, I mentioned from 1991 to 1994, the economy shrunk by 50% and inflation was 2,000%. I mean, that's historic. That's a really mind-boggling shock, and maybe one that we didn't fully appreciate at the time. Its overwhelming nature. But the shocks of the last changed. 3, 4, and even if we go back to that banking crisis of the last 10 years, have been significant for Moldova. But Moldova's come through, and it's come through effectively. Yeah, I think Moldova has and Moldovan institutions have shown that they're capable of managing the economy effectively when faced with a pandemic, when faced with spillovers from a war next door. That's really impressive. So there was high inflation. There were other developments, but I think institutions have proved to be resilient. They've proved to be effective. And as I mentioned at the beginning, we may have more shocks, but at least on our baseline, we can start to see growth re-emerging, starting to recover. And I think we can see the economy strengthening and moving forward, and now a historic opportunity to join and further integrate with Europe.
On the other hand, what do you think would help economic recovery in Moldova?
Well, I think it's a good question, and there, I think you can look at this in many different dimensions. There are issues that you ask me if I'm surprised by some things from 25 years. One thing that surprises me is to hear people still complain about queues at the border. For example, when I was here in 1996, 1997, 1998, if you drove to Iași, well, it took about 3 hours. It took a long time to cross the border. That's still the case. So addressing very concrete and practical bottlenecks, very practical obstacles would help with growth. So if issues like infrastructure, like the quality of roads, the ability to border crossings, if those can be addressed and progress can be made there, well, that would be a big boost to growth. Then you can take a step back and look at things like implementation of the budget. Usually in Moldova, the outcome of the budget is different than what was planned, and usually there's underspending. So the budget is not necessarily a good working as effectively as it could to marshal funds to the right place. And usually the underspending is in infrastructure, is in capital investment. So improving the execution of the budget would be pro-growth. I think having a strong anchor around European integration and starting to make progress on that will give confidence. People will see it's really going to happen. It's really going to happen that we're going to integrate with Europe and we're going to join the single market, and that will tell people, I better invest. I better be out there first. I better be the guy taking the credit, investing in some new machinery, some new equipment, some new process, because when it happens, I want to be the guy who's first in line and benefits from that. So that I think once you start to see progress, and it's happening, the government and the National Bank are preparing well for this process. You have to get closer to the European standards and requirements in a number of areas. Once that process starts to move, I'm confident that there'll be a strong sign of confidence among households, among firms. There'll be more investment, there'll be more optimism, and that will be another place for growth. Of course, the war in Ukraine continues. There are uncertainties. Some people see that as a big source of risk, so they've been sitting and waiting, saying, well, let's see how that plays out. So I think if you can fix problems and obstacles like border crossings, other areas of investment that are needed for specific problems, improve implementation of the budget, and really start to build a dynamic of this is where the country's going and this is how we're going to get there, that will even overcome some of the risks and uncertainties around the regional environment. I'm confident of that.
How does the Republic of Moldova stand regionally today? How does its prospects look, perhaps compared to other countries in the region?
Well, I think Moldova is probably has lost a little bit of time and a little bit of progress that other countries have made over the last 20 or 25 years. So I think if we go back 5 years ago, I think it was seen as probably one of the slower moving countries. That its growth was strong, but maybe the institutions were not relatively as good as in some of the countries in the region. Some of the results were not as good. I think there's been a lot of catch up in the last few years. So there's been a real focus on how to move forward. And I think that the geopolitical developments, the war in Ukraine, has brought the international community to focus on how to support Moldova, how to help bring it through this difficult time, and how to support Moldova in European integration. So I think that's led to some catching up and catching up fast. I would also say, Moldova is a relatively small country, so progress can be made quickly, and it can be felt quickly in a small country. It's a country with 2 or 3 million people, an economy of $17-18 billion. So progress is felt very quickly compared to a much larger country, or where these things take more time. So this is also a way of encouraging the authorities to also move quickly. That they can sort of change direction. Be nimble, be fast, and move in a new direction very quickly.
Finally, Mr. Horton, there are Blitz interview.
Yes.
Are you ready?
Yeah, I'm ready.
Okay. What is the IMF?
The IMF, well, it's a group of 191 countries. We're soon to have our 191 first country that have come together to support each other and to provide to be in a position to provide financial support to countries that are in need. It's also a country. It's also an institution that looks at the global economy. It looks at regional economies. It looks at individual member country economies. Its surveillance function gives policy advice on what needs to be done, and then it supports it with technical assistance in order to make sure that policy advice can be implemented effectively. So it's a universal institution, which is great. We have almost every country in the world now. There are a few that haven't joined, but so that's part of its strength. And then part of its strength is that it really focuses. It has a clear focus on the stability of the global economy and member economies and their sustainable development to the benefit of the people. So I have to say it's a great place to work with that kind of objective and those focus.
Why does the IMF finance the Republic of Moldova?
Why? Well, it's Moldova is a member country, so if it needs financing, if it faces financial needs, it's welcome to come to the IMF and request financial support, and it's not it has to undertake certain commitments to receive support. We want to make sure that if there are imbalances, that policies are taken to correct those imbalances, so that they're not continuing over time. And then it needs to win the support of the 190 countries that are represented at the board of the IMF. So we support the Moldova when it needs money, when it's committed and takes policy measures to fix difficulties or challenges that it faces, and when it has the support from our full membership.
One problem that the Republic of Moldova must solve.
One problem. Well, I think many people would say corruption, rule of law, governance. That nexus of problems has been an issue in Moldova for for 30 years. And as I mentioned earlier, if progress can be made, if that issue can be solved so that these issues are lower or at a manageable level, then the country can grow faster, people can feel more stable, more secure, and people the out-migration of people would become less. It would be a more integrated country with Europe and with the global economy. So that would probably be the number one thing to focus on is getting the economy more transparent, more functioning better, and with better rule of law, more control of corruption, and better governance.
We used to give some practical advice in this section.
Yes.
What message do you have, what advice do you have for the young people who are willing to and able to invest?
Well, they have to make their own decisions. It's their capital, but I think they need to be convinced that the country has a good policy framework in place and it has a good set of objectives. And if they're convinced of that, and they're convinced the country is going in the right directions, they can feel it, they can see it, then of course they should invest. I think there are great opportunities in Moldova. And there are opportunities to be taken. So if the economy is functioning well, if the policy framework is good and the objectives are clear, somebody's going to invest in Moldova, and it may as well be smart young Moldovans.
In what should one invest?
That's a good question. I think things that will benefit from this increasing integration with the single market. So things that are around, what products, what services, what goods can be produced in Moldova that will find strong demand at the right price in the single market and in the global economy. And some folks invested in wineries 25 or 30 years ago, and they made a very good investment. It was not like picking money up off the ground. They had to invest in their vineyards. They had to invest in their technology and their way of growing and producing wine. But now they're benefiting. Moldovan wine is now globally recognized as excellent, as an excellent product. So I think it gives a template. This is something that the world likes. It's something that demands. The resources are here. Finding another product, another good, another service that can find its place in the single market in Europe and find its place globally would be the way to go.
How about cash? Does cash have a future?
Not with me. I'm carrying around cash. I never use it, but of course it has a future. But I think increasingly less so. So I think it's convenient to use electronic payments. It's quick. It's efficient. It's clear. It's transparent. Cash will always be around. It's kind of nice to have some cash, but I think its role will become smaller and smaller. It's not clear whether digital currencies are in the future. I know a lot of central banks are exploring that as a way to go, but I think the position of cash will be increasingly limited. And of course, cash is used in some criminality, and so it provides anonymity. It provides some convenience from time to time, which is good, but it also can be used in ways that are less positive and more prone to criminality.
What important developments do you anticipate in the financial sector?
In Moldova?
Maybe not. Maybe in the world. Well,
I think the financial sector has shown globally through COVID and the run-up of inflation that it's resilient. We've come through globally two major shocks in the last 3 or 4 years without another financial crisis. We had some banks that didn't make it, banks in Switzerland, banks in the United States, but in general the financial system has proven to be robust. This is very good news. I think there were, if we look back 10 or 15 years ago, there were times when the financial sector went into crisis, and then it brought the global economy down. It cost a lot of money for taxpayers. So it's a good thing that we're past that. I think it will still be important for banks and the financial sector in general to continue to find ways to provide its services at low costs. To anticipate new demands, new requirements, new services, and to provide those effectively. You mentioned financial inclusion at the very beginning. This is what I have in mind, that banks are quite profitable right now. So they'll need to find ways to ensure that they provide good services to the maximum number of people, including people who have been underserved historically. Some groups, some segments of the population who have not had access, and of course the rise of digital payment systems and digital platforms that needs to be managed effectively. So products like insurance or pensions or in some countries access to credit for housing, for other major life purchases. There's still a lot of work to do, and all this while continuing to be stable and not not imposing costs on countries or on taxpayers.
And last questions.
I'm not being very blitzy in my responses.
No problem. What are your immediate expectations for the region's economy?
Well, the European economy has been gone through again a series of shocks with COVID, with the run up of inflation. It's not functioning where it should be yet. We had good news today that inflation in Europe in November was lower than expected. It was 2.4%, so it's getting close to its target, which I think gives hope that interest rates could start to come down sometime and support recovery. So I think in the near term, I mentioned earlier that the German economy has been struggling somewhat. Some of that is due to high energy prices. Some of it is due to China and slowing in China. Some of it over a more longer term will be to move away from the German economy is really good at producing cars. And now that electric vehicles are starting to emerge, whether it will be competitive there will be a big question for Germany, and because of that, a big question for Europe. But I think I hope we've seen the worst of those crises. The pandemic, the energy price shock, and the slowing in China, and that we start to see some improvement. Some countries have high debts, some low-income countries, some emerging market economies, even large and wealthy countries. So the United States has had a big increase in debt and also has a high deficit right now. That's a source of concern for some. And countries like Italy and France and in the European Union, of course, if there are negative developments in terms of geopolitics, this can cause another shock. And another concern that's emerged in the last few years is this whole question of what we call geoeconomic fragmentation. So the idea that, there'll start to be different blocks in the world, maybe one is around China, perhaps China and Russia, and other countries. Then you'll have another block and maybe in Europe, another block around the United States and Canada, and that there'll be less trading with each other, less supply to each other, less interaction. That will bring higher costs as the global economy becomes less efficient. This may be driven by geopolitics. So if we've seen that in the last few years. different relations between the West and China. And it started with some geofragmentation. If that continues, that will be weighing on the global economy.
Thank you.
Thank you. Yeah, a pleasure
Thank you
to be
very
here.
much.
Yeah, thank you. Thank you.